Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, October 30th. It's 7:25 as I'm starting the video. As you've probably seen, futures are moving really quick this morning. I almost feel like as soon as I end the video, it'll be invalidated by the pre-market price moves. But let's set up the day as best we can. I'm gonna buzz through the indexes and the FAANG names, and then take a quick look at Twitter, and then we'll set up for our trading day. So here we are, SPY daily. Quickly, we've gone over this the last couple days. We're currently at last night's close at 330, which is the midpoint of this $20 trading range. I think today a good bullish objective would be simply to close above yesterday, to get price in the top half of the box above 330. I think that would be a good accomplishment for the bulls today, to take it into the weekend with a deep look lower and then finish it up above 330. Let's look at the 2-hour chart. Our pre-market low this morning was 323, right down here at the bottom of this box. What I've done in purple here is do a bear flag measured move. So from the top of this swing high to Wednesday's low, and then yesterday we had a 50% fib kickback up to the gap, and then I extended the measured move from yesterday's close down here to 318. Now, one thing I like to do is when I'm actively trading, shorter time frames, is to mark that pre-market low on my chart. Why? Because very often, no matter what rally or whatever takes place in the interim, like right now we're trading in the 329s, close to this 330. They often come back and check the pre-market low in the regular session. So keep that in mind and be ready for that move, because it's just the way it works. In the regular session, price tends to try and find both the pre-market high and the pre-market low. So mark that low at 323, and then the key level is 322. And then if we break that, the potential to come down here into the 318s on a Friday afternoon before the election. And here's one other thought. We always say bad selling doesn't end on a Friday afternoon, and I think we can put an exclamation point on that. Bad selling doesn't end on a Friday afternoon before an election on Tuesday. So this has been a de-risking moment for the market. There hasn't been a lot of movement in bonds, so I think people are just raising a lot of cash. They're selling what they have, what they can, what they have embedded gains in, right across the board. Gold, everything imaginable. And of course, tech is getting hit hard too. So that's just some extra thoughts. But yesterday, real nice technical action. I mean, we had this playbook in here with the fibs and the lineup with the gap from the other day. So that worked out great technically. And one other thought, if this had been just a regular run-of-the-mill, day yesterday, this is your objective short, your swing short on a rejection of this fib move. And if you did that, I know there was at least one gentleman in our trading room that did that on the Qs, and it has, worked out great. But this is real nice technical action, and that's what, that's how we get paid. Looking at these bounce zones, looking at potential failure points, and then either exiting our longs and getting short or stepping aside if we weren't comfortable with an overnight hold. I think here this morning, if we bounce above this 327 and hold it, it would be something you could potentially buy with a move back up to 330. But I think they're going to come back and test this low at some point today. It could be in the final half hour of trading, and I have no idea. But remember, there's going to be a big gap. I don't have it marked in here, but there's going to be a gap from 330 down to wherever we open, be it 327, 326. So be aware of that. There may be an attempt to flash the gap fill and fill it first and then roll over, or if everybody changes their mind, rip it higher and then go up here. But I doubt that. But stay flexible. Let price come to you and let it lead you, lead your trading. Qs, we talked about this 270 as the midpoint of the box. I think bulls would do great to simply hold that today. Stay above the midpoint of the range. And, if you can take it green today, great. But even just holding it, I think, would be a decent accomplishment. If they finish below the midpoint of the range, then your technical target becomes 260 right away. Pre-market low of 269.50 right here lines up pretty well with this 268, which was, this is the box that contains most of the price action between 268 and 280. And then we had the double bottom low down here in September that we're at 261. So today, I think 275 is a key level. If it can get above that, then it has a chance to build on those gains. But below 275, I think favors lower. Come back here and check that low and possibly test this 268 level. And then, of course, if that were to break, then our longer term target of filling the big box on the re-entry would be achieved, coming down here for a tag of 261 back at the September lows. This 30-minute chart on Qs. Really nice technical action yesterday with the move up. Your entry point would have been on a break above this 275, and you got a nice $4 push out of that up to the bottom of the gap in the 618 retracement level. And now, of course, we're down here, at least the last time I checked, down here below 275 with price just kind of oscillating in that area. So you can use that 275 as a pivot. That worked great yesterday, and I think it still holds today. If price moves above it, you can stay long for a gap fill and potential move higher. But as long as 275 holds, then I think you can be short against it and look for a retest of the pre-market low and then this 268 level. IWM, not doing a whole lot pre-market. It really sets up the same exact way as it did yesterday. You've got this overhead gap. You've got the 50 EMA right at the same level. So we're right in the middle of the range on the daily. This 51.67 was the low of the other day, and we are right in this area here between 154.50 and 155. So this gap still has to get filled, and I think if price dropped back down below 154.50, you can be short and look for this extended move down towards 53, 51.5, and then ultimately 150. Because if you take the measured move from here to here, that's, let's see, 160 to 153, that's $7. And then $7 from 155 puts you down here at, 149, 148 actually. So that measured move points way down towards this 150 area, and I wouldn't be surprised if it made it there today, depending on what the Qs and SPY do, of course. Here's the 30-minute chart. Got a nice push in the afternoon. If you got long near the lows at 153, you had that was a nice little trade. But then it got stopped at the 38% retracement level and the gap, and now it's oscillating right in this area. So you can get long into the gap, and you can get short below 154.50, or if it pushes up to the gap and gets stopped, that would also be a nice short entry location with a stop just above. That would, it all depends on which way it kind of breaks right out of the gate. Facebook had a lot of, I'll say, crazy price action with gap ups on Snap, and then another gap up on Pinterest, and then I have the opening price range right around 274. Remember, there'll be a gap below on the open because of what from yesterday, and then there'll be a gap above as well because we closed up here at 281, and we're going to open at 274. So there's going to be gaps on either side. So I think you can use the opening price level as your pivot with gaps on either side. That may be a tough entry, actually, because you don't really have a good line to shoot against. Right here at 276, if it broke above that, then you could get long for a gap fill up to 281. That would be a nice trade. Let's do that. Let's do that. If you're not comfortable trading that opening, 10-minute range or whatever, let's use 276 as the pivot. Get long above 276 and stay short below it, and see if it comes down and fills this gap down to 268. I think the pressure will be to the downside, but If price tips its hand and breaks out above 276, it may go up and fill that gap. Apple, pre-market low was 108.50. It has recovered 110, and that's been our bull bear pivot for quite a while, or at least a key level quite a while. You'll have a big $5, $5.50 gap above because of the gap lower. I think you can use 110 as your bull bear pivot. Anything above it, you can stay long and look for a gap fill. But if it drops below, I think it'll come back and retest the pre-market low at 108.50 and potentially move back into this area. Now, you can see that this was a big gap area that we had marked way back when, and it was partially filled back here in September. So, but I still think the line is good here at 108. And anything lower than 108.50, the pre-market low, you should just stay short and then look for moves down towards 106 and 103. Tesla has an opening price down around 405. I continue to say anything below 410, stay short and look for 390. Anything above 410, you can look for 420. Just realize that there's going to be a little gap on the open, about $5 or $6 wide, and price may come up quickly to fill that gap and then get rejected at 410 and come back down. Anything higher than 410, I think you can be long and look for 420. Microsoft has been weak in the pre-market, had a pre-market low of 200 and is now right around this 202 level. And that's actually a nice spot for active traders. Above 202, can look for a gap fill up to yesterday's close at 204.50, but then anything below would favor coming back down to test the pre-market low and potentially go lower if things fall apart. Amazon has been hovering here at 31.50. Gap above to yesterday's close up towards 32.10, and then anything below 31.50 would favor 3100. That would fill this gap, and then 30.50. Those $50 increments have been working really, really well, and I want you to continue to lean on them, when you're active trading. But here sets up really, really well. 31.50 has been a key level. Anything above is bullish for a gap fill. Anything below is bearish. And remember, today's Lotto Friday. If you're into that kind of thing, if there's some kind of dramatic sell-off or bounce, you can do really well if you pick your strikes properly and you get the market on a unidirectional move. Just keep it real. They could call it a lottery for a reason. Most people lose, but those options won't be any cheaper than they are today. So you do what you want there. Google is really the only one of the bunch that did really, really well after earnings. We actually had an earnings high of 17.15, which is right up at the all-time high, and it has backed off a little bit. So there'll be a gap below the open, all the way back to 1560, which was yesterday's close, and then a breakout level right here around 1715. If I were trading this, let's look at the hourly. Well, it's not even on the scale. I mean, you can see the go off the scale here at 1680. Excuse me. If you got a push up to the prior high, notice that you'll probably have bearish divergence there, and you may get a double top setup, because remember, price may want to go back and check that pre-market high of 1715, and if you see negative divergence there, that might be a great fade to lock in at the all-time high and then hold on. That could be a good, swing into Monday if you wanted to do that, or just a lottery pick for today if there's a quick run to the top and then sell off the rest of the day, unidirectional, come back and fill this gap. That might be an awesome trade, but let price be your guide. Netflix. Here's our moon bar from yesterday when they announced their price increases. If you had, got in at the box low, which is your objective long, you had, you're sitting pretty today, especially if you got out yesterday at 15.15. But now it's pulled back in the pre-market to around 495. Might be a tough entry here. I think you've got a little line here at 492.50 you could possibly use, but I think anything north of 490 remains bullish. And certainly if you got a entry back into this gap at 505, you could take that long for a gap fill try at 525, 20 bucks. But if it sells off again, if it drops below 490, then it's back to 480, and that would be a failed breakout. And then anything below 480 would target 475 and 465. And wrapping up with Twitter, went from channel high right through down here and is trading in the 44 area. If this were to come back to 39, that would be a great objective area to try and get long here, where the 200's coming up and you've got the breakout level. We had been in that and made some up here. Should have stuck with it, but didn't. So now, probably a tough trade, but this will set up as a bracket trade on Monday and the days ahead with the high and low of today's range. So we're going to want to mark that one. That may end up being a nice trade either today or down the road. Okay, let's wrap it up there. Kind of hard to guess with the pre-market price action, moving all over the place. I will look and fine tune it. It's 10 minutes to 8 as I close the video. What I'll do is, if I see anything monumental or anything that I see that would help, be helpful to you today before the open, I will just shoot you a note via email to inform you of whatever I'm seeing. But other than that, that's the way I see it. Should be pretty volatile today, I would think. And heading into the weekend, double check your weekend risk. Make sure you carry what you're going to carry. Remember, today there's an option expiration. Make sure you've double checked all your positions so you don't get surprised tomorrow morning and find out you own shares that you weren't planning on. So double check that, and we'll see how it wraps up. I'm sure I'll put together something midday and send it out as we head to the close, just to see how we're shaping up and to pass along my thoughts. Okay, I really appreciate your time this morning. New viewers, I really appreciate you stopping by and checking out the channel. Please hit the like and subscribe button, and I'll keep you well informed of what I'm seeing with a lot of actionable content. Also look over in the show notes for links to the blog site and to register for all my content. And if you do that, you'll get an invite to our trading room, and all the guys would love to have you join us. Okay, have a good day of trading. Stay flexible, stay fluid. Be a leaf on a stream. Let price take you where it wants to go with no ego, no preconceived notions, no locked-in narratives, and you'll find trading a lot easier. And lean on those levels and just focus on your execution. The levels are right. I have a lot of confidence in them. Lean on those levels, focus on your execution, and you'll have a great day of trading. Thanks again. This has been Chris Buss with Traders Profit Compass. Talk to you next time.